Hello everyone, welcome back traders, and good morning to you. I do hope you had a wonderful and blissful weekend out there, and I hope we are all pumped up and getting ready for another exciting session on the Forex Morning Mastery with Sheriff Daramola. Well, I'm so excited to have you join me for another edition of our weekly price action based technical analysis. And of course, today we are going to be doing a follow-up detail to my videos that I shared during the course of the weekend. And in fact, for those who have not watched it, you're actually missing out. You will need to watch that video so that you can have a background knowledge of what we are going to be talking about here. And of course, we are going to be having levels, key levels, trend lines, which we've already identified, and you know how we do it. Basically, we are going to be analyzing on the 1 hour time frame, which of course is serving as our execution time frame. So I implore you to watch it if you have not. The link to the videos are right in the description box of this current video that you are watching, and in fact they are duly timestamped so you can easily navigate to whichever aspect of the video is of your interest. So try to watch it after the live session. And as usual, what we are going to be doing today is to well, of course, yes, it's not news. I've already done a comprehensive analysis on this instrument, and in fact I shared some update this morning on this instrument so far this week on how we are going to be managing our buyers on all the instruments on our watch list. So for this week, we have, as usual, of course, the USOIL SPOT, the GBPUSD, the XAUUSD, and of course the USDJPY. So these are the four assets we are going to be monitoring for this week. And in fact, this week is jam-packed with a whole lot of high impact events that of course will the anticipation of this event will definitely be reflecting on the chart as price action. So we might likely be seeing some choppy, indecisive phase during the first half of the week. It's very peculiar, especially when we have major events coming up later in the week. Most important one is the interest rate decision coming in from the US economic docket, and we also have something interest rate decision coming in from the Japanese economic docket. But the US economic docket is the most important one as it has a major influence on price action. And of course, the US oil also will definitely be affected with the anticipation and even the decision that is made on Wednesday. So for those who are joining us for the first time, you're highly welcome on board. In fact, what we simply do here is to come together as a community in anticipation of both the London and the New York session. So during the session, we normally do follow-up details, review our current position, as well as looking out for potential trading opportunities ahead of the trading sessions. So with that being said here, let's dive right into the business for today. And as usual, you know how we do it. The first thing we are going to be doing is to check on the economic calendar. We all by now know how important the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and of course price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical pattern, and this helps us in better timing ourselves in such a way that we can position ourselves in anticipation of catching that move prior, during, and even after the event. So going into the economic calendar for this week, I was able to spool out a handful of high impact events that we are going to be looking forward to. So for today, Monday, July, today is what again? I think I missed that one right there. Today is 24th, so we shall be moving right into the 24th of July. So the first high impact event for today is, for this week, is coming in about 2 minutes from now, and that is from the United Kingdom Economic Docket, and this is the S&P Global CIPS Composite. And the CIPS Composite is based on a large number of business executive and private sectors, manufacturing and services company. So this data is usually released on the third working day of each month, and each response is weighted according to the size of the company. So this is another high impact event that everyone will be looking forward to. Then we also have the CIPS manufacturing PMI. This is gives us an insight into the UK service sector. It's an indicator of the economic situation in the United Kingdom's manufacturing sector, which everyone will be looking forward to, as this will be giving us an insight into how healthy the United Kingdom economy is. Then later on today, I think in about 3-4 hours from now, we are going to be having the S&P Global Manufacturing PMI coming in from the United States too as well. And this is another event that majority in the market will be looking forward to. And from the previous data compared to the consensus projection from both scenarios here, it appears that, okay, for the United Kingdom, we have a consensus projecting something lower than expected, while from the US economic docket, we have a projection which is lower on the global services PMI and higher on the global manufacturing PMI. So these are very high impact events that everyone in the market will be looking forward to. And of course, the data, the anticipation of this event will be reflecting on the chart as price action. And in fact, we're beginning to see data coming in from the UK economic docket, and every data that came in here came in below expectation, which doesn't seem interesting or palatable for the United Kingdom. So we are going to be looking at the chart to see how the market is going to be reacting to this event. So with that being said here, let's dive right into the business for today. And before I dive deep, please, I would really appreciate your feedbacks in the comment section as regards to the audio and the visual of this session. So if there are any issues, please feel free to let me know in the comment section. So if the sound quality is not good, please let me know. And if the visuals are not good, please let me know, as this information will help me to be able to do the appropriate adjustment, hereby making us have a better experience out there. So thank you very much as you do so. So having that been said, we shall be diving right into the first instrument for today. And of course, the first instrument on our watch list is the USOIL SPOT. So right here on the USOIL SPOT, please, if you had not watched my video on the USOIL SPOT, I would implore that you watch the video, as it will give you an understanding of what we are looking at here. So right here on the USOIL SPOT chart, remember in our video we acknowledged that price action was caught within a range between the $77.20 level and of course the $75 area, to give us an insight into the level of indecision in this market. And one thing we've observed here in the last couple of weeks on the US oil market is how the buyers had continued to push price to the upside, which is something that the OPEC Plus member have been orchestrating in the last couple of months now. So they've been trying to artificially increase the demand in the market for oil, and their target is a minimum of $80 per barrel. And one of the criteria they have been using to artificially increase the demand in the market is by cutting oil production, which has been consistent right here in the last 3 months. The last meeting that happened at the beginning of last month, I think beginning of this month, we saw another oil cut production of about 2 million barrels per day, and things appear to be working in the favor of the OPEC Plus member. And of course, we have been available to take advantage of this bullish move. So right now, price is caught within a range between the $77.20 level and of course the $75 area. And in that video, I explained that depending on what happens around that $77.20 level, will determine what our next line of action will be. Now, while trying to decipher what could happen this morning as regards to this current market structure, I was able to identify the fact that price has remained confined within a range, which is quite a signal that reveals the level of indecision in this particular market. And considering the fact that we are anticipating a high impact event on Wednesday, I'm of the opinion that market participants here will also want to see what would the data be like before making any next move in this particular market. So before we go into the details here, I would like to share with you my commentaries on the USOIL SPOT this morning as regards to how we are going to be managing our position, at least for the first half of this week. And this is my commentary here on TradingView. Of course, if you are with me on the Telegram platform too as well, you will definitely have gotten this update. So I said here, upon market opening, a bearish gap becomes evident, reflecting the prevailing institutional sentiment over the weekend. Despite this, trading activities have been limited to the $77 and $76.50 range, highlighting the indecision among market participants as they prepare for the upcoming Fed's interest rate decision midweek. At this juncture, we exercise patience, eagerly awaiting a signal in the form of a potential breakout or breakdown of the current range, which could present favorable trading opportunities. So now this is what I was able to bring up here. So going back into the live chart here, you will see that we already have a flat channel to work with for this week. Now the question right here is, are we going to be having a breakdown of structure, or is there going to be a breakout of this level? Then another thing I would like to call our attention to here is this ascending trend line, which has been supporting this bullish momentum for quite a while now. As you will see here, let me highlight it so that you can see what I'm talking about. So this is the ascending trend line, which of course has been guiding that bullish momentum in the last couple of weeks. Now, for me to consider selling the USOIL SPOT, I would rather want to see price break down that ascending trend line to give us that privilege that the trend line may no longer have the capacity to negate bearish momentum. But before that happens, of course, if you look at the distance between where price action is and the trend line, you will see it's roughly about 90 pips, and it doesn't make any sense for us to wait the whole 90 pips before taking advantage of that move. And one thing I see here is that we can actually capitalize on a bearish momentum even before the breakdown of that ascending trend line happens. That is, if price action will be dropping to the downside this week. And in order to take advantage of that one, I'm going to be looking forward to a breakdown of that support line at the $76.50 level. Remember, we are not getting too excited here, as we would need confirmations to happen before we jump into any selling position at this point. So once the breakdown happens, we scale down to our lower time frame, like the 5 minutes, 10 or 15 minutes time frame, to look out for confirmations that sellers are gaining momentum. And this would reflect on the chart as price retesting the structure. A couple of retests will give us confirmation the sellers are getting stronger. Then we can join the bearish move to the downside. Now, very important here, as soon as price action gets into that ascending trend line, of course, we want to remain patient, waiting to see how the market will react to this trend line to decide if we are going to be adding more sell position, and that will only happen at the breakdown retest of that structure. And if the contrary happens here, buy pressure resumes, then we are likely going to be getting ready for another wave of bullish momentum. The other perspective we are going to be looking at from this current structure is the breakout of the ascending trend line. So the breakout of the resistant line in this particular market. So a breakout of the resistant line will be a signal that price is likely going to be going to the upside. So we want to be on standby to catch that move. But I'm of the opinion that for us to buy or sell at this point in time, we need some confirmation, and confirmation will only come in the form of a retest of the structure that was broken. But trust me, I will be with you in the comment section as usual on both my TradingView and Telegram platforms to give you updates on how we are going to be taking advantage of any move, and if there is any significant or interesting evolution of price action here, of course I will be letting you know in the comment section of the public platforms. So if you have any questions whatsoever as regards to what I just explained here, feel free to let me know in the comment section. If there are any aspects of this illustration that you think you need me to shed more light on, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. And you can as well use that time to mark out these levels on your chart. All right, so in the absence of no questions, I want to assume that we are on the same page, so we shall be moving right into the next instrument on our watch list. So the next instrument on our watch list is the GBPUSD, and in fact we have seen that the market has significantly reacted to that event with a bearish note here, triggering our first sell position for the week. And if you had been with me on the Telegram and TradingView platform, you would have gotten my commentary as regards to how we are going to be managing our position for today. So let's run through what I said on the GBPUSD this morning as regards to the current market structure. So here we are on the GBPUSD, and this was my commentary this morning as regards to this current market setup. So I said here, recall that in the video we focused on the significance of the key level at the 1.28400 area as a critical determinant of price action during the first half of the week. Since the week began, the price has consistently stayed above this key level, forming higher lows that are clearly visible through the ascending trend line. This trend line, in conjunction with the key level, will serve as a reliable gauge to identify potential uptrend trading opportunities. However, it is essential to keep an eye on the trend line breakdown, as it could indicate potential bearish opportunities. In such a scenario, further opportunities may arise at the breakdown retest of the key level at the 1.28400 area. So now, looking at the market structure here this morning, while trying to decipher what could likely happen based on this current market structure, I had a couple of parameters here which I said we will be using to guide our trading activity. Now, one of the parameters here is the ascending trend line, which of course after connecting the series of higher lows, we got that one marked out. And you know how we use our trend lines in this community. As long as price remains above the trend line, we want to be looking out for buying opportunities, and if price breaks down the trend line, we want to be looking out for opportunities to sell. And in fact, we saw the breakdown of the trend line, and remember I shared this channel here where price action was ranging between the 1.287 and the 1.284900 level. And of course, when we have a flat range like this, a breakout or breakdown of that range will be the trading signal we are looking for. Now, with the breakdown retest of the 1.28490 level, we have our sell position triggered at this point, and price action is currently running in our favor with over 40 pips in profit at this point in time. So for those who are taking advantage of this opportunity, well done to you for being on standby to catch this move, as you would want to be moving your stop loss at this particular point in time to your entry point, as I'm not going to be counting this as a profit at all. Things could still change, so I'm just going to be having my stop loss at the entry point while I continue to monitor price action from this area. However, for those who had missed out on this opportunity, there's no cause for alarm. The week is still very, very early, and there are still chances that we could still take advantage of an opportunity. In fact, this bearish momentum could still turn out to be a false breakdown. Let's put this in mind too while we also continue to monitor price action. So for those who had missed out on this opportunity, well, the only thing I would say here is for us to remain a little bit more patient to see how the market will be reacting to this key level. One of the criteria we are going to be looking at is from a technical standpoint. Of course, whenever we see a breakdown of a key structure such as the one we just witnessed now, we expect that there is a likelihood that price will come back at some point to retest the structure, probably followed by selling pressure to incite a trend continuation to the downside. And in fact, this whole scenario here could take about 2 to 3 hours before it matures. So there's no cause for rushing, there's no cause for alarm. Let's keep calm and let's see how the market is going to be reacting to this current structure. Then I also want to call our attention to the previous low here, which falls around the 1.28200 area. Look at what we have here. Right on Friday, we saw a strong buy pressure resume around that zone, and at this point in time, price action is around that level, which for us calls for some concern at this point. And one thing you will notice is that we're beginning to see some buy pressure resume around that area. So don't let's jump into conclusion here. Don't let's worry. Let's keep calm and let's wait for price action to gradually evolve into a new setup that we can use to maximize this potential bearish move, or probably join a bullish momentum if price action climbs above the key level and then resume buy pressure above this area to incite a trend continuation to the upside. But of course, I will keep you updated on my trading view and Telegram platform as always. But one thing I would like to say here before we close on the GBPUSD is this demand zone right here, which I would love to identify and call it our temporary demand zone. In the meantime, while we wait and see how the market will be reacting to this particular zone. So I'll place this right in the middle and then give this a darker color. So we have a temporary demand zone here where price action is still played around. But if price action goes on to further break down that level, then a retest of the structure. Let me give you a visual representation of what I'm talking about here. So if price action goes on to break down that temporary demand zone, and in fact break it down close below that structure, a retest will definitely give us an opportunity to add more sell position to our existing trade. But mind you, we are not going to ignore the potentials of buyers, as we could see that temporary demand zone serve as an accumulation phase to incite a bullish move. And one more thing about the structure is how that temporary demand zone shares a confluence with the ascending trend line we identified on the 4 hours time frame. And I told you earlier that for those who have not watched my video on the GBPUSD, it's important you watch it so that you can have a better understanding of this current market structure and why we are making the decision we are making on the 1 hour time frame. The links is in the description box of this current video, so you can watch it after the live session. And for the sake of clarity here, let me just share with you what it is looking like on the 4 hours time frame so that we can have. So look at what we have here. Now, if you recall in the video I shared during the course of the weekend, I told you how important the current structure we are in right now is, and that is our key level area at the 1.28400 level. And one interesting thing about that structure is the fact that it shares a confluence with that ascending trend line that we spotted on the 4 hours time frame. Now, the question going into the new week, which I emphasized in the video, was that will price action respect that ascending trend line to incite a trend continuation to the upside, or are we going to be having a situation where the trend line and that key level will be broken to the downside to incite a sell-off, which of course, remember, we have a bust up here which could still serve as a potential bullish momentum, and if it breaks down the 1.27, then we will be looking out for more opportunities to sell the GBPUSD. So you would agree with me that we are at a critical point in the market right now where anything could happen. So the bearish momentum we took advantage of this morning, ensure you move your stop loss to break even as we continue to watch how price will be reacting to the structure. This trend line, this breakdown could still turn out to be a false breakdown, so let's keep this in mind while we continue to monitor price action. So this is where we are right now from an holistic perspective, which is still very open for a bullish momentum at this point. So let's keep this in mind. Move all stop losses on the current sell position to break even while we wait and see how the market is going to be reacting to that demand zone right here, which of course shares a confluence with that ascending trend line we identified on the higher time frame. So let's see how this will play out, and the next 1 to 2 hours will tell us what our next line of action will be. And of course, I will be giving you updates in the comment section of both my TradingView and Telegram platform. So I will be pausing here, and if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to wait and see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing it to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we're on the same page here. I do hope you've marked out these levels on your chart. Very important, as you will be needing them as a reference point to guide trading activities for today. So the next instrument on our watch list for today is, of course, the XAUUSD. And on the XAUUSD this morning, we identified a range. Let's run through our commentary as regards to the current market setup and how we intend to manage our ideas on this current market structure. So this morning I shared this on all public platforms, where I stated that as we approach the midweek's Fed's interest rate decision, trading activities have continued to stay above the week's key level at the 1,960. This has prompted a bullish bias for the time being, at least for the time being, of course. Focus will be on seeking buy opportunity, especially if there is a breakout and retest of the recently identified resistance line at the $1,962.50 level. On the other hand, we also need to be watchful for potential selling opportunities if there is a breakdown retest of the support line and key level. This could signal a shift in market sentiment and open up possibilities for profitable short positions. let's keep a close eye on this price level and be prepared to act accordingly. So this is the levels I shared here this morning. And based on this chopper situation here, we had initially identified our price action was ranging just right around that key level at the 1,960. So this key level was the level we identified during the course of the weekend, and we acknowledge how this level has been a major determinant of price action in the last couple of months. And you know how we use our key level in this community. When price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. But if price action drops below the key level, we want to be looking out for patterns and structures that will support the idea of selling. But one thing we've observed here, at least in the first 9 hours in the market, since the market began this week, we noticed that price action has been ranging just right around that key level, giving us an insight into the level of indecision in the market at this point. Now, it is obvious that price action has been confined between the $1,958 level and, of course, the $1,962.50 area. Now you know how we do it in this community. When price action falls into a range such as this one, we want to remain patient, waiting for either a breakout of the structure retest to welcome an opportunity to buy, or the breakdown retest of the support line to give us an opportunity to sell. So with the range situated right here, well, if you are taking advantage of a buy position at the breakout, though I sent this already, the breakout had happened when I sent this, so I was expecting that a retest of structure is what we shall be looking out for to be part of that bullish move to the upside. Though price has come back down, it's yet to come back up. So at this point in time, I will be suggesting that we have a buy stop order right now above the $1,962.50 level to join this bullish move to the upside. And one of the criteria that will make us want to consider buying at this point is the fact that price still remains above our key level. And of course, if you notice what happened around that key level during the last trading day of last week, we saw as soon as price got into that structure, we saw strong buying pressure resume around that area. And in fact, in the last 5 to 6 hours too as well, we have been noticing buy pressure around that area, giving us a clue of the strength of the buyers around that point. And if price still remains above the key level, it's still very promising to hold on to a bullish bias in this particular market. And the only thing that will make us want to start considering selling at this juncture is if price action does break down both the key level and the support line here at the 1,958. So if we have a situation where all the buy positions around this area is being taken out, then we will start considering selling the XAUUSD. But remember that we are not going to be jumping into conclusions, as we will still need significant confirmation for us to be part of any sell position here. So as soon as a breakdown of the structure happens, we want to be scaling down into our lower time frame, where we shall be looking out for confirmations, signs that buyers are finding it difficult to climb back above that key level at the 1,960 area. And of course, this would reflect on the chart as continued selling pressure to incite a bearish move to the downside. And remember that we have an ascending trend line right here on our 4 hours time frame, which we identified in the video, where of course, depending on how price action reacts to this ascending trend line, will determine if we are going to be adding more sell positions or getting ready to join a bullish move. So a breakdown retest, of course, will welcome selling opportunities right here. And if price action finds buy pressure above the structure, we will be in for another wave of bullish momentum. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates on how we are going to be positioning ourselves for any move. But at this point in time, a lot of people will get probably get caught up in the fear of missing out on this current structure right here, as we see selling pressure resume in the last 58 minutes right now. But don't get too excited or anxious at this point. Let's remain patient, wait for the breakdown to happen. Then we scale down into our lower time frame to look out for confirmations, which will of course reflect on the chart as a retest of structure before joining any potential move. Please note this: wait for structures to mature before we want to be joining any position at this particular point in time. Now let me give you a peep into what things are looking like on the higher time frame. And if you want to get a better understanding, you can watch my video on the XAUUSD. And this is what I would like to share with you here. So on the 4 hours time frame, I observed this, an ascending trend line. In fact, I had a couple of ascending trend lines after connecting the series of higher lows. And in addition to that ascending trend line is that key level that we spotted at the 1,960, which has been a major determinant of price action in the last couple of months. Now look at the confluence we are in right now. You would agree with me that we are at a critical point in the market right now where price action shares a confluence with both the ascending trend line and the key level. So we want to see how the market will be reacting to the zone. That is why it is very important that we remain very, very patient. So there are two scenarios that we can expect from here. The emergence of buy pressure above the structure, above the 1,960, will incite that the trend line wants to be respected one more time to incite another bullish momentum. And if we cite a breakdown of both the 1,960 and the trend line, then we could be in for a bearish move. So let's see how the market will play out in the next couple of hours. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So if you have any questions as regards to this current setup, feel free to let me know in the comment section. And trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right, so in the absence of no questions, I want to assume we're on the same page. Then I also want to acknowledge here again that I just situated a demand zone around the 1,958. So despite the strong selling pressure we notice here, we still need to be very, very patient and careful, waiting for that structure to be broken down for us to be thinking of selling at this point in time. But as long as price action still remains above that 1,960, 1,958 ish, we're still looking out for buying opportunities here. So at this point, I will be moving on to the next instrument on our watch list, which of course is going to be the last pair we are going to be taking for today, and that should be, so that's the USDJPY. So on the USDJPY, if you had watched my video on the USDJPY, we had a very simple setup right here, which is one structure we are going to be using to determine our next course of action for today. And in fact, we were able to enjoy a very strong bullish momentum during the later part of last week, which fetched us over 350 pips plus on this particular instrument. Now, if we consider what went on the last trading day of last week, I think the last couple of days of last week, we saw this impulsive move that brought price into the 142.00 level, which happens to be the highest point price action has been for a while now. And since price tested that level, we saw selling pressure resume around that area, allowing price action to evolve into a consolidation phase. As you will see, price caught within a range between the 142.00 level and of course the 141.350 level, giving us a flat channel to work with. And you know how we do it. Whenever we have this kind of range, we want to wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And if we look at the structure closely from a technical standpoint, considering the strong impulsive bullish move that brought price to the upside, this old pattern here has a high chance of evolving into a trend continuation pattern, where the breakout of the resistance line will be what we are looking out for to join a uptrend continuation. However, in as much as this is a possibility, it could still also turn out to be a reversal pattern too as well, where price breaking down the support line at the 141.350 could incite a bearish move. Now the question for the bearish potential, that is if price breaks down the 141.350, is how far will that bearish momentum go? Is it going to be a sell-off, or is it going to be a retracement into that ascending trend line we identified on the 4 hours time frame to incite another bullish momentum to the upside? Or is it going to be breaking down the ascending trend line to incite a sell-off at this point in time? So these are the scenarios we are going to be looking at today. Now it appears that price action just broke down the support line, so we are going to be looking forward to price closing below that structure, retesting it on our lower time frame before we start considering selling. Now to do that, since we have this setup on the chart right now, let's run through the lower time frame together and see what is really going on around that area. Now scaling down into, let's say, the 15 minutes time frame, for instance, let's see what is going on there, after which we'll scale down to a much more lower time frame and to see, okay, I think we should go down to the 5 minutes. Okay, so nothing really interesting here, so I'll go back to the 15 minutes time frame, and then we want to be identifying some couple of levels here that we are going to be using to guide our trading activities here. So I will be suggesting that the 141.350, which happens to be the level we identified on the support line we identified on the 1 hour time frame earlier. So I'll place this one at the bottom right hand side of my screen. All right, here we go. And of course, we've been noticing lower highs too, so we want to connect a series of lower highs here, which will be our guide to guiding a bearish momentum, if that is what is going to be happening here. So we have a simple setup to guide trading activities on the lower time frame right now. So and then I think we have, okay, 141.560. Okay, 560 level. So we place that at the top right hand side. Here we go. So now going into the New York and London session today, we have 3 parameters here to guide our trading activity. The first one is the descending trend line after connecting the series of lower highs here on the 15 minutes time frame, giving us a clue that sellers are trying to push price to the downside, but this is not yet confirmed, as we are yet to see a lower low in this particular market. So as long as price still remains above or around the 141.350, we still cannot say it is a bearish signal. So for us to sell at this juncture, we need price to break down the 141.350. That should happen first of all, and we're beginning to see some potentials that sellers could break down that structure. Then we scale down into probably the 5 minutes time frame to see a retest of structure, and if the trend line is unable to be broken to the upside, then we are going to be joining a bearish move to the downside. So what this simply means is that as long as price action remains below this descending trend line, we will feel comfortable in our sell positions while we also look out for more opportunities to sell the USDJPY. Trust me, I will be with you in the comment section to give you updates if there are new setups to maximize this bearish move. However, if the buy pressure around the 141.350 persists at this point, then there is a higher chance that we could witness a breakout of that descending trend line. And of course, the breakout of the descending trend line will be a sign that we might be seeing a momentum shift at this particular point in time. And remember, we are not going to be getting too excited. We of course want to wait for confirmations on our lower time frame, like the 15, 5 minutes, or even go to as low as the 3, 2 minutes time frame to look out for signs that sellers are losing that momentum, and this would reflect in the form of retest of the descending trend line followed by continued buy pressure around this area. Then we could have buy at that point or have a buy stop order above the 141.560 to join an uptrend continuation. So the parameters we have here on the 15 minutes time frame are very much suitable to guide our trading activity for today on the USDJPY. So let's mark these levels out on our chart, as we will be needing them to guide our trading activities for today. So this is my view here on the USDJPY, and if you have any questions whatsoever as regards to this current setup, or you need me to do some clarifications as regard to my explanations earlier, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the comment section while I also give you that time to mark out these levels on your chart. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So I will be rounding off for today. It has been a wonderful moment out there today. And in fact, we have been noticing the anticipation of market participants ahead of the Fed interest rate decision, the Bank of Japan interest rate decision, the CPE, and of course, we also have one more event, which is, let me see which one that is again for this week. I think let's see, I think that's all for this week. And the GDP data for annualized for quarter 2, which is also coming up this week. So this week is jam-packed with a lot of high impact event, and of course we are likely going to be seeing some choppy situation during the first half of this week in anticipation of this event. So let's keep this in mind. Hence, we need to ensure that we allow our structures to mature before we jump into any positions. So I will be seeing you in about an remember, we have the XAUUSD live monitoring window session where we shall be monitoring the XAUUSD live right here on the YouTube. So I implore that you join me and be part of that session. Engage in the comment section while we monitor price action. And in fact, I already shared the link to the XAUUSD live monitoring window in the comment section of this video right now. So you can click it. You want to click it and then click the notify me button so that whenever I come online, you will get notified in due time. So I hope to see you very soon in the comment sections as usual. And let me say here that if you have found this content helpful and useful in making your independent trading decisions on all the financial assets we talked about today, I would greatly appreciate your support by giving the video a thumbs up. Your likes are very valuable to me. I really appreciate them. And in fact, it also makes the YouTube algorithm to push this video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you would always stay updated with the latest ideas I share, and of course, receive notifications whenever I upload new videos and commentaries. So I look forward to seeing you all in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone, and see you during the XAUUSD live monitoring window. Cheers. Bye-bye.